Hey guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brent Rasmussen, and today's Mortgage Matters in Minutes, we're going to talk about pre-approvals, but most specifically, monthly payments. Again, I'm owner of Mortgage Specialists and been lending over 25 years, and today I've seen thousands and thousands of pre-approvals and suggestions to clients of what they should look at for home prices and payments and running numbers in regards to that. So what we're going to chat about today is kind of some of the errors maybe people may look at in a pre-approval or what they are doing for a pre-approval. So first, what is a pre-approval? And that word gets thrown out a lot. All it really means is that a professional has looked at your credit, your income, and your assets and decided if you qualify by the loan guidelines that exist. And I will tell you, mortgage professionals generally look towards Fannie Mae, Freddie Mac, FHA, and VA for the most guidelines to get you qualified. So before you put an offer in, especially in tight markets, you definitely need a pre-approval letter. And so that's what you're seeking. But when clients contact us and call us, a lot of times they want to know what the maximum amount is for the pre-approval because it makes them feel good. But if we share with them what the maximum amount is, sometimes psychologically in their mind, they feel that that's what they can afford. And we want to put the budget for their monthly payment into the budget of their real income and their real lives, their net income. Because when we look at income for mortgage loans, we look at gross income, which is the number before taxes. So a lot of times when we grant a pre-approval for clients, they want the highest number, but generally speaking, that's not always practical because I've seen clients that have nearly no bills get qualified at 2 or 3 times the amount that they want for a home. And it makes no sense to go put an offer on a $300,000-$400,000 house if you show them you're pre-approved to $1 million. The seller kind of has questions there of why are you looking at doing something like this, or vice versa. So that's the first kind of trick that we see individuals fall into, is getting that number and getting a false sense of hope that that's how much they can afford. Because really, we're wanting to talk with them and saying, hey, what do you feel your budget is for your monthly payment, and how does that look in qualifying? So in regards to a real pre-approval, what we are looking at as lenders is how much of a payment you can afford. I know when you want to work with realtors and real estate agents and looking for homes, they're all going to want to look at a price point. The challenge that we run into as mortgage lenders is every house has different property taxes and different homeowners insurance. Whether you're on this side of town or that side of town or whatever the case may be, we do know taxes run differently. Generally speaking, here in Nebraska, the newer the home, the higher the taxes, but the insurance is usually cheaper on a newer home. Doesn't always go true when it depends on the size of the home or the location or the zip code. There's lots of factors that we fall into. So when people call and say, hey, I want a pre-approval for up to this dollar amount of a home, we do list that on the pre-approval. But do know that the pre-approvals truly are based upon what the max monthly payment is, and that's what we call debt to income ratio. We look at your income, we look at your debts, and we divide those two. So generally speaking, all of your debts need to be within that 40 to 45% of your total gross income. Obviously, there's certain instances on certain loans you can go higher than that, and there's certain instances where you can go lower than that. So a lot of people call us and say, hey, I make this much money, how much can I afford? And I'll say, well, it depends how much debt you have. And that's why when we do a pre-approval, we have you fill out an application so we can obtain your credit report, whether it's a soft credit check or a hard credit check, to be able to look at the payments that you have and make sure you qualify for what it is that you're looking for. And I can tell you right now, with the interest rates being higher and the home values being higher, people are looking at home prices, but wanting a significantly lower payment, which puts them into a significantly lower bracket of homes. And that's been challenging for many to undertake because we've seen inflation big in regards to interest rates and home values as well. So really, what's it come down to when we're looking at a pre-approval? In simple terms, it comes down to how much of a home payment can you afford with your current income and your current debt. So as mortgage lenders, we have to guesstimate what a payment looks like on a $300,000 house, on a $400,000 house, on a $500,000 house. We have to guess insurance. We have to guess taxes. Some mortgage lenders are going to guess more accurate. Some are going to be a little bit more inaccurate and giving you some false numbers. So that's what makes it very challenging when you may go and get 2 or 3 pre-approvals is trying to compare apples to apples and numbers to numbers, because all of us might be plugging in a little different formula. I can tell you at Mortgage Specialists, we review what we put out on a daily basis and also look at what we quoted compared to what happens at closing. And if those numbers are differ, we change as we go, as the market is ever changing, because the best thing we can do for you is give you accurate numbers to go off of. If you're not getting accurate numbers, that doesn't help you. It doesn't help me, because you're discouraged at the end of the day thinking that you can afford a certain home. After you move in, you have more debts than you want. So when you're looking at getting a pre-approval, look at the pre-approval. If you are a realtor or if you are a consumer, look at the max payment that an individual can qualify for. That's what your pre-approval is based upon. We're not going to tell you for sure you can afford every $300,000 house in the market, because there might be one out there that has absorbent taxes and insurance for some reason. Or there might be a house that's a $400,000 house that has very cheap insurance and cheap taxes. So what we pre-approve individuals on is the max mortgage payment, and that's going to be listed in your pre-approval. If you get a chance when you receive your pre-approval, read through it, see if it makes sense to you, see if the numbers are accurate. And that's what's going to be given to the seller's agent when you submit your offer. So I hope you learn a little bit more in depth about a specific pre-approval, because that's what really matters in regards to real estate and for you setting your budget moving forward for your life and living in your home. So if you have any questions for us, we're just a phone call away at 402-991-5153. You can check us out on our website at mtg-specialists.com. And we'll love to hear from you, and hopefully we'll see you all next week, same time, same place. Mortgage Specialists. Driven, trusted, reliable.